Elizabeth, step away from the terminal and leave the token on the desk.
So Chase finally called somebody.
Once is a mistake. Twice is suspicious. Elizabeth Gutfar did this 187 times across 10 years as the elected treasurer of Santa Cruz County. And she built a system specifically designed so no one would ever find out.
We're here because the wire approvals don't match the people who supposedly authorized them.
That little device ended up meaning more than I thought.
I want to speak to my attorney. Those were the words Elizabeth Gutfar gave the FBI when they arrived at her ranch outside Rio Rico, Arizona. She had been the elected Santa Cruz County treasurer for 12 years. In that time, she had personally wired $38,712,100 out of the county's savings account and into shell companies she controlled. 187 transfers. 10 years of conduct. Every dollar lifted from the property tax fund that paid for the county's schools and fire districts. By the end of this story, a federal judge will sentence her to 10 years in prison and order $51.8 million in restitution. The court-appointed receiver believes the county will recover roughly 1/3. Before we go any further, I have to ask. The woman you are about to learn about held an elected office for 12 years and stole $38 million from the schools and fire districts in her own community. How does someone in a county of 50,000 people get away with that for a decade? Drop your theory in the comments. Hit subscribe if you haven't already. We cover cases the mainstream press buries every single week. Elizabeth Gutfar was born in 1961 in Nogales, Arizona, the small border city that sits 11 miles south of Rio Rico and shares a customs port with Nogales, Sonora. Her family had been in Santa Cruz County for 3 generations. Her father worked at a feed and supply store on Grand Avenue. Her mother kept the books for a small trucking outfit that ran refrigerated produce north from the border. The Santa Cruz Valley in the early 60s was a quiet stretch of cattle country, ranches, and pecan orchards strung along the Santa Cruz River. Elizabeth grew up walking past the county courthouse on Morley Avenue, a low adobe and stucco building with a flagpole out front and a directory inside listing the offices of the sheriff, the recorder, the assessor, and the treasurer. She would later occupy the last of those offices for 12 consecutive years. She graduated from Nogales High School in 1979 and enrolled at Pima Community College in Tucson, completing a 2-year accounting program in 1981. Her first job was as a bookkeeper at the same trucking outfit her mother had kept books for, earning $4.25 an hour. She married Manuel Gutfar in 1983. He was a 4th-generation rancher whose family ran cattle on a parcel west of Rio Rico that they had held since the 1920s. The couple settled at the ranch house. Elizabeth kept the ranch's accounts in a hand-ruled ledger at the kitchen table, balancing feed receipts against cattle sales and tracking the cost of every veterinary call. In 1989, she took a position with Santa Cruz County's finance department as an accounting clerk. Her starting salary was $21,000. Her annual evaluations from that period described her as exceptionally detail-oriented, trusted with sensitive ledger work, and the only clerk in the department who reconciled to the penny on the first pass. She was promoted to senior accountant in 1995, to chief deputy treasurer in 2003, and in 2012 she ran unopposed for the elected position of Santa Cruz County treasurer. She won with 14,847 votes. She was sworn in on January 7, 2013, in the same courthouse she had walked past as a child. By every outward measure, she was exactly what voters wanted in a county treasurer. She was local. She had a quarter-century inside the finance department. She knew the property tax ledger by heart. She showed up at the Rotary Club, at the volunteer fire department's spaghetti dinners, at the Board of Supervisors meetings on the first and third Tuesday of every month. Her name appeared in the Nogales International newspaper twice a year, every year, attached to the routine notices a county treasurer is required to publish. Tax lien sales, investment pool returns, year-end financial summaries. Her photograph in the paper, the same one used for a decade, showed a woman in a navy blazer and a small turquoise pin, smiling without showing teeth. The ranch grew during those years. The Gutfars added acreage in 2014, again in 2016, and again in 2019. The cattle herd expanded. The barn was rebuilt in 2017 with a new metal roof and a poured concrete floor. A second ranch house went up in 2020 on a parcel near Patagonia. Neighbors who saw the construction assumed cattle prices had been kind, or that Manuel had inherited from a great uncle nobody had talked about. Nobody in the valley asked the county treasurer where her family's money was coming from, because in Santa Cruz County, the county treasurer was the person you asked about money. To understand what happened inside that courthouse, you have to understand how a county treasurer's office is supposed to work. In Arizona, the county treasurer is an elected constitutional officer. The treasurer receives all property tax payments from residents and businesses inside county lines, deposits those payments into the county's pooled bank accounts, manages the investment portfolio that holds the operating reserves, and disperses funds to the entities entitled to them. In Santa Cruz County, those entities included the county government itself, the 3 school districts that served roughly 6,000 students, the Sonoita Elgin Fire District, the Tubac Fire District, the Rio Rico Fire District, the Public Health Department, and the Road and Flood Control Fund. The treasurer does not operate without checks. The architecture is layered. The first layer is the dual control wire transfer protocol. When the county needs to move money out of its bank accounts at Chase, 2 separate officials must authorize the transfer. One initiates. A second, holding a separate physical security token issued by the bank, approves. The 2-person requirement exists for one reason only. It prevents any single official, no matter how senior, no matter how trusted, no matter how popular at the spaghetti dinners, from both originating and approving an outbound transfer. It is the structural floor of public finance integrity at the county level. Every county in the United States that handles public money runs some version of it. The second layer is the Arizona Office of the Auditor General. Each year, the Auditor General's office reviews the bank statements and reconciliation records of every county in the state. The audit is supposed to be the independent eye that confirms what the treasurer is reporting matches what the bank actually holds. The third layer is the county's internal financial control cycle, which is supposed to compare the treasurer's monthly reports against bank-issued statements. The fourth layer is the elected board of supervisors, who receive the treasurer's quarterly investment reports and are supposed to read them. That is the system as designed. In Santa Cruz County, between 2014 and 2024, every single layer of it failed, and every failure traced back to one elected official who knew, from 25 years inside the finance department, exactly where the gaps were. The first wire went out in 2014. The amount, the date, and the destination would not be publicly identified for another decade. By the time federal investigators reconstructed the timeline, they would identify approximately 187 transfers spread across 10 years, draining the county's savings account in increments calibrated to never trigger an alert and never appear during the months an auditor would be looking. The method had 3 components, and each one was designed to defeat one of the layers above. The first component was the shell companies. Gutfar created a series of business entities, companies that existed only on paper, companies that performed no legitimate work, companies that had no employees, no inventory, no customers. Each shell had a business bank account opened in its name. To the casual reader of a wire transfer log, the recipient names looked unremarkable. They looked like the kind of vendors a county might pay: holding companies, management firms, consulting outfits. They were not. They were destination accounts she alone controlled. The wire would land in the shell account. From the shell account, she would move the money again into her personal accounts, and from there into real estate, ranch renovation, cattle operations, and vehicles. The second component was the security token bypass. This is the architectural heart of the case. Every wire transfer required 2 separate authorizations, one to initiate and one to approve. Gutfar could initiate. She could not, by design, also approve. The second authorization was supposed to come from a separate person holding a separate physical token. So she took the token of a subordinate Santa Cruz County employee. She used that token 187 times to approve her own wires, to Chase Bank, to the county's institutional architecture, to anyone reading the transfer log. Every single transfer appeared properly dual authorized in full compliance with the two-person rule. The dual control architecture had been collapsed completely into a single-person operation. The subordinate did not know. Gutfar told her, when she asked at all, that the transfers were going out to generate interest for the county. The third component was the audit timing. Gutfar had spent a quarter-century inside the finance department. She knew the Auditor General's annual cycle the way a tide chart knows the moon. The Arizona Auditor General reviewed the county's bank statements once a year, and the months they reviewed were June and July. Every other month, the audit was effectively blind, so she never stole in June or July. From 2014 through 2024, across approximately 10 years of monthly conduct, she stole in January, February, March, April, May, August, September, October, November, and December. She did not touch the savings account during the 2 months a state auditor would have actually been looking. The county's later civil complaint, filed against the state of Arizona itself, would put it bluntly. Aware of this careless practice, Gutfar strategically never stole funds in June or July, and consequently, the Auditor General never found out about the embezzlement. With the three components running together, the operation was nearly closed. She still had to handle the internal county records, so she falsified them. The accounting records were altered to hide the outbound transfers. The cash reconciliation records were altered so that the balances appeared to match. The investment account reports she submitted to the Board of Supervisors were falsified so that the portfolio looked stable and the savings looked intact. Every quarterly report she filed across 10 years contained numbers that did not exist. The supervisors received the reports, voted to accept them, and moved on to the next item on the agenda. And then she spent the money, real estate purchases. The renovation of the family ranch outside Rio Rico, the new metal roof on the barn, the poured concrete floor, the second house near Patagonia, operating expenses for the cattle business, at least 20 vehicles parked across the ranch property and in the outbuildings the contractors had put up. Federal prosecutors would later describe the vehicle fleet as one of the more visible expressions of the embezzlement. 20 cars and trucks owned by a county treasurer whose official salary across her entire tenure had never exceeded $80,000 a year. She did not report any of the stolen funds as income. The Internal Revenue Service would later calculate that she had evaded more than $13 million in federal income tax across the conduct period. The tax evasion would become its own federal count. For 10 years, nothing inside the system caught it. Not the Auditor General, not the Board of Supervisors, not the internal control cycle, not the subordinate whose token had been used to approve every one of the transfers. The catalyst, when it finally came from outside the county entirely. In April of 2024, the fraud monitoring system at Chase Bank flagged a series of unusual transactions in accounts associated with the Santa Cruz County Treasurer's Office. The flag was generated by an algorithm, not a person. The bank's compliance team reviewed the transactions, identified the pattern, and contacted the county. The phone call went to the county manager's office. The county manager, who had served alongside Gutfar for years and who had voted to accept her quarterly reports without question, took the call, listened to what Chase was describing, and went very quiet. The county pulled the bank statements directly. They did not go through the treasurer's office. They went straight to the bank. The statements arrived. The numbers in the statements did not match the numbers Gutfar had been reporting to the supervisors for 10 years. Not by a little, by tens of millions of dollars. By the end of the week, Gutfar had been suspended from her position. The county hired outside forensic accountants. The forensic accountants spent the next several weeks pulling every wire transfer log Chase Bank had retained for the county's accounts. The log showed the recipients. The recipients were companies nobody at the county had ever heard of. The accountants started running the shell companies through state corporation databases. The state databases showed who had filed the formation paperwork. The same name kept coming back. Less than 4 months after the Chase Bank call, Santa Cruz County filed a civil lawsuit against its own elected treasurer. The suit named Elizabeth Gutfar and itemized, as best the forensic accountants could reconstruct at that early stage, the structure of the conduct. It described the shell companies. It described the wire transfers. It described the use of the subordinate's security token. It described the audit timing pattern. And it would, in a subsequent amendment, name a co-defendant the county had not initially planned to sue: the state of Arizona itself. The civil case was now in motion. The criminal case was about to start. The FBI's Tucson resident agency had been briefed by the county. They had pulled in IRS criminal investigation. The Department of Justice Public Integrity Section, which handles federal corruption cases against elected officials, had assigned a prosecutor. She had no idea any of it was happening. The federal investigation took roughly 6 months from referral to indictment. It moved faster than most public corruption cases of its size because the evidentiary architecture was, in a strange way, almost too clean. Gutfar had not used cash. She had not used couriers. She had not used cryptocurrency. She had used wire transfers, every single one of them logged by the bank, every single one of them carrying a timestamp, an initiating credential, an approving token identifier, and a recipient routing number. The wire transfers had been her tool of choice for 10 years because they were fast and they were quiet. They were also, it turned out, the most documented financial instrument in modern banking. The FBI pulled the full set, 187 transfers from the county's account to the shell company accounts she controlled. Each transfer carried 2 credentials. The initiating credential was Gutfar's. The approving credential was the subordinate's. Investigators interviewed the subordinate. The subordinate did not know what the credential had been used for. She had never personally approved a single one of the transfers. She had not known the wires existed. IRS-CI ran the personal side. They subpoenaed Gutfar's personal bank accounts. They traced the inflows back to the shell company accounts. They traced the shell company accounts back to the county's savings account. They built the chain end to end. They also pulled her tax returns for the conduct period. None of the inflows had been reported. The unreported income, taxed at the appropriate rates, came to more than $13 million in evaded federal tax. The Public Integrity Section assembled the rest. The shell company's formation records, all filed under names traceable to her. The falsified internal county records, showing balances that did not match the bank's. The falsified investment reports she had submitted to the supervisors. The audit timing pattern that had been visible in the data the entire decade, but that nobody had been looking for. We're heading into the courtroom now. Before we do, if this case has held your attention this far, that's because the story deserved to be told properly. Subscribe if you agree. The verdict in this one will surprise you, and the parallel civil case against the state auditor general is the part of the story most outlets did not cover at all. The smoking gun, when the prosecutors finally laid the case out in their pre-trial filings, was the security token log itself. Each of the 187 wire transfers carried a digital fingerprint identifying which physical token had approved it. All 187 approvals carried the same subordinate's token identifier. The subordinate had been at lunch during some of the approvals. She had been on vacation during others. She had been at her mother's funeral in another state during one of them. The token, in the institutional design, was supposed to represent a second, separate, independent human being authorizing the transfer. In Gutfar's hands, it had become a single-person rubber stamp on her own outbound transfers. Every one of the 187 transfers, on its face, looked properly dual authorized. In operational reality, the entire dual control structure had been collapsed into a single-person operation. The federal case was closed beyond reasonable dispute. In November of 2024, before the case ever went to trial, Elizabeth Gutfar pleaded guilty. The plea statement was signed in a federal courtroom in Tucson. She entered guilty pleas to 3 federal counts. 1 count of embezzlement by a public official, 1 count of money laundering, 1 count of tax evasion. She allocuted on each. The allocution on the embezzlement count was the one that landed. The prosecutor asked her, on the record, whether she knew, at the time she was taking the funds, what those funds had been used for. Whether she knew where the property tax money in the savings account went. She paused. She said yes. She said it knowing the answer was going to be read into the sentencing memorandum. She said it knowing the answer was going to be repeated by every reporter covering the case. Her own plea statement language, as written into the federal record, became the sentence that defined the case. I knew when I was stealing the funds from Santa Cruz County's savings account that the funds in this account were used to pay expenses for schools and fire districts. She did not break down. She did not cry. She read the statement in the same, even voice she had used at the supervisors' meetings for 12 years. The voice that had reported numbers that did not exist, quarter after quarter, while nobody in the room asked her to prove them. Her attorney did not speak. The prosecutor did not press for more. The judge accepted the plea. Gutfar was released on conditions pending sentencing. She returned to the ranch outside Rio Rico, the ranch she had bought with the county's money, and waited for the sentencing hearing 7 months later. The sentencing hearing was held on June 23, 2025, in the federal courthouse in Tucson, before United States District Judge Rosemary C. Marquez. The courtroom was full. Residents of Santa Cruz County had driven up from Nogales, from Rio Rico, from Patagonia, and from the small unincorporated communities along State Route 82. Several were teachers. Several were volunteer firefighters. Several were retirees who had paid property taxes in the county for 40 years. The government's sentencing memorandum asked for the statutory maximum on the embezzlement count. The defense asked for a downward variance, citing Gutfar's age, her lack of prior criminal history, and the November 2024 guilty plea. Judge Marquez listened to both arguments. She heard from the United States Attorney for the District of Arizona, Timothy Corshane. She heard the line that would be quoted by the Department of Justice press release the same afternoon. Ms. Gutfar stole more than money from the people of her county. She betrayed the confidence of the voters who elected her. This sentence shows that abuse of public trust will be punished. Judge Marquez imposed 120 months in federal prison, 10 years, the statutory maximum on the embezzlement count, 3 years of supervised release to follow, restitution of $51.8 million, payable to Santa Cruz County and the United States Treasury. The court-appointed receiver, already working to liquidate the real estate, the ranch parcels, the cattle, and the fleet of vehicles, had told the court privately that the recovery estimate, even running the full asset recovery cycle to completion, would land somewhere around 1/3 of the loss. The remaining 2/3 would not come back. The schools and fire districts would not see it. Gutfar was remanded to the custody of the United States Marshals at the conclusion of the hearing. She was processed at the federal detention facility in Florence, Arizona, and subsequently designated to the federal prison camp at Bryan, Texas, a minimum security facility for female inmates serving nonviolent federal sentences. Her projected release date, factoring standard good time credit, is in late 2034. The civil litigation continues. Santa Cruz County's lawsuit against the state of Arizona and the Auditor General, Lindsay Perry, remains pending. The county's complaint alleges that the state auditor's office never independently confirmed the cash balances Gutfar reported, never reviewed any month of bank statements other than June, and never once, across the entire 10-year conduct window, requested a random sample of statements for any of the other months in which the embezzlement was actually occurring. The state has denied the allegations. The case will likely take years to resolve. The Arizona legislature, in the months following the sentencing, opened discussions about reforming the state auditor general's audit timing protocols. The proposed reforms include randomized monthly sampling, independent token issuance separated from the treasurer's office, and real-time state-level monitoring of county cash positions. None of the reforms have yet passed. Santa Cruz County's schools and fire districts continue to operate. The shortfall, for now, has been absorbed by emergency state appropriations and county budget reductions. The position of Santa Cruz County Treasurer remains an elected office. The voters in the November 2024 cycle, even with the embezzlement front-page news for 6 straight months, turned out and elected a new treasurer to fill the seat. The new treasurer's first official act was to commission an outside review of the office's wire transfer control architecture. The review's central recommendation was simple. No one person, regardless of title, should ever hold the physical tokens of more than one authorization roll at a time. This case was staggering, but the case on the right-hand side is somehow worse. Click it now.